Hi, good morning, everyone. This is Travis Dean with the Tax Clinic here at the Legal Aid Society of San Diego. With me today are Wendy and Luz. We're going to give you some information about your taxes. I will also recommend or ask, there is going to be a survey at the end, so if you could please complete that survey when you're all done. And then with that, I will attempt to share my screen. All right, is that good? Can we see it? All right. Okay. There we are. So here are some topics we're going to cover today. Mainly, we're going to be talking about our 2024 tax filing deadlines, go over some of the different types of income you can have, some of the credits you can get. We'll also talk about tax fraud prevention and some information about some upcoming laws and things like that. So to start with, here is the thing that starts you with your withholdings, your W-4. This is the sort of the start to making sure you're in compliance with your taxes. The W-4 controls how much tax is being withheld from your paycheck. There's some information here on how that works. These slides are going to be available after the presentation is over, so don't feel like you need to take any notes. And so if you need more information, you can always come back. So I'm going to go through just to make sure we stay on time. Different filing statuses: single, married filing jointly, married filing separate, head of household, and qualifying widow. This is just making sure that you are filing correctly. We do also, if you need help with your taxes, I think we're going to have some information later on free tax preparation clinics that you can attend. So who can be claimed on your tax returns? The dependents are either qualified child or qualifying relative. There's some rules here regarding who can be a qualified child, who can be qualified relative. All right, and then I think next after this is going to be Wendy.
It's actually Luz, Travis. So Luz, we'll pass it to you.
Thank you. Okay, what do I need to file my 2024 taxes? Start by gathering your W-2s, your 1099s, and other income documents such as Social Security statement, retirement, gambling winnings, or self-employment income. Most workplaces allow for these documents to be accessed electronically, so take advantage of that prior to January 20th of 2025. The IRS will start processing paper and electronic returns starting on January 27th. And also be ready to share with your tax prepared information about jobs, unemployment, children, or other dependents. Make an appointment with 211 as soon as possible for free tax filing services. Remember that this is subject to eligibility requirements. Next one, please. Benefits of filing taxes even when not required. It allows you to get refundable credits for overpayment of taxes, EITC, child tax credit, or first-time homebuyer credit. It also provides you protection against future audits and IRS mistakes, tax fraud, or identity theft. It's easy to claim state credits, and this is a proof of residency and good moral character for immigration. Next one, please. When to file by. Regular taxpayer for federal and state 2024 tax return. The due date is April 15, 2025. Don't miss out on your refund for the tax year 2024. File your taxes as soon as possible to avoid paying interest and penalties. And next one, please. Now I'm going to pass the presentation back to Travis, I believe.
All right, so we're going to talk about some different sources of income. I'm sure most people are familiar with W-2 wages, but we also have a lot of various types of 1099s and gambling winnings. The thing that we're going to talk about here with 1099s being your self-employment income, it's really important to stay current on your taxes for you to make estimated tax payments when you're self-employed. So the big difference between self-employment, 1099, and W-2 wages is that the employer will automatically withhold taxes for you for your W-2 wages. But if you are a 1099, then you are responsible for withholding your own taxes. So that's definitely something, if it's something new for you, to get with a tax preparer, before your taxes are due, to try to come up with a plan for how much tax you think you might owe. And then we're also here going to talk about, we've highlighted there in green, apps like Venmo, Zelle, PayPal are going to have more stringent requirements on when they have to report that information to the IRS. So the rules have been changing. The rules used to be that if you had more than $20,000 in any one of these apps, that information then would get reported to the IRS, and the IRS would use that information to assume that you were using these apps to collect income for self-employment. That number has been lowered to $5,000 and will be eventually lowered down to. So if you are using a lot of volume on these types of apps, be aware that that information is going to be recorded or reported to the IRS at lower thresholds. So some more facts for self-employed individuals. There are two types of Schedule Cs that you can use. There's the regular Schedule C, but there's also a Schedule C EZ if you have less than $5,000 in expenses and you have no employees. So typically W-2 pays about 15% of their income. One thing to note is that when you are self-employed, you basically essentially pay double in Social Security, Medicare taxes. And that is because when you are a W-2 employee, your employer pays half. But if you are self-employed, you are responsible for the entire amount. And so some tips to track your expenses. Carry a book and write your expenses in it. Annotate your bank account and write down your mileage. It is really important if you do get audited. It's very helpful to have notes that you made at the time that you incurred the expense. The IRS views those. You get essentially they carry more weight if the note was made when you did it and not trying to go back after you've been audited and put together lists of your expenses. So you have to, or you're required to pay your estimated taxes quarterly. And so that first quarterly due date is coming up on April 15th, and then there's June 15th, September, and then January 15th of the next year. This is just some information on how to make that payment. A good way to make your estimated tax payments is to sign up for what is called EFTPS, Estimated Federal Tax Payment System. And then Wendy, you'll have to kick in and remind me when we're switching over because I can't view that list.
I think it's after this slide, Travis.
Okay, I got one more. All right. So deductions and changes. Standard deduction, anyone can use the standard deduction. Schedule A, which is your itemized deductions, they have to be more than the standard deduction. There were some itemized deductions that were eliminated recently, and I think it's still up in the air whether that's going to be permanent or not. And then you have your self-employment deductions, business mileage, vehicle expenses, home office, things like that. The update here is the standard deduction went up. So it is now, you see the thresholds there, 15,000 for single, 22,500 for head of household, and married filing joint is 30,000. All right, and now we're turning it over to Wendy.
Thank you, Travis. So, now the tax filing requirements for everybody, remember, so as Attorney Travis mentioned, any income that you earn, wages, salary from self-employment, 1099K, over $5,000 in transactions, business income from electronic sources, unemployment, rents received, interest and dividends, you need to report that to the IRS. And always, whenever you're not sure, feel free to always just file your taxes no matter what. And that will be something that we will always recommend you. The most common tax form used by individuals is the Form 1040, 1040C, and 1040A. And also, so down here at this table, it's the, the breakdown of, how much would a single person need to earn in order to file taxes if they're under 65. So, it will be $14,600. And you guys can see here the different categories on how much people will need to earn to file their taxes. And also, in the case you don't file taxes because, you forgot, or maybe you had a big life incident, you always have 3 years late to file your taxes. So make sure that you guys do that. If the IRS were to file a return for you called substitute for return, it means that you may have forgotten to file your taxes, or you didn't think you need to file your taxes. So just, file your taxes every year, because you're also able to let the IRS know in case there is an issue, like, hey, I actually filed my taxes. And, it's easy to talk to them about any issues that may come afterwards versus them filing your taxes for you. Next slide. So then another thing, to keep in mind with taxes is that there are tax credits and deductions. So tax credits, they reduce your taxable burden dollar for dollar, and deductions, they reduce your taxable income. So let's say you have an income of $100 and you pay 10% in taxes, you'll pay $10. A deductible will be with that same income of $100. Let's say you're able to deduce $20. So that will reduce your taxable income to only $80. So now with that taxable income, you only pay $8 in taxes. And a good example of this will be the standard deduction. And then a credit will be with the same income and a tax of $10. A refundable credit of $15 will pay for the tax due. And so it will result in a $5 refund. So with this in mind, think of your earned income tax credit, your child tax credit, all of those credits that give you a refund may help you pay for your debt that you have with your taxes every year. So something to keep in mind too is that these credits, they don't stay the same every year. So tax law is on the way changing. But, make sure that, when you go with your tax preparer, just mention like, hey, I want to make sure I'm claiming all the credits that I can to make sure that I'm paying for all my taxes that I have to pay per year. Next slide. And so now some options to free file. So as Luz mentioned, 211 and my free taxes. So please call 211 as soon as you can. So these BITA sites are places that can help you file your taxes for free if you earn up to $67,000 and meet other requirements. And for self-employed individuals, you can claim up to $35,000 in expenses with no limit or item number. So this is a great tool to file your taxes, federal and state, with assistance from a reliable tax preparer who will be willing to answer all of your tax questions. If you are a self-employed individual, and these BITA sites work to send you to myfreetaxes.org, make sure they have great guides for small businesses, gig workers, and childcare providers. So they will give you, the best information on what some of the deductions may be and some of the credits that you could ask for. They do have free certified IRS specialists over the phone during this tax season, so Monday to Friday, 10 to 6. And they also have email and message support. So please call BITA as soon as you can. I know that they're getting very busy, the BITA sites. And so if you're also ever using a website that claims to help you file your taxes for free, make sure that, that these features are being free all the way. And so with BITA sites and myfreetaxes.org, that could be assured for you. Next slide. And so now there is also an option with the IRS.gov. It's called Free File. So this is for individuals who earn $84,000 or less. This program will be available from January 27 all the way until October 15 of 2025, which is usually the date for the extension. So if you need to claim an extension, make sure that you file your taxes by October 15 of 2025. This service is offered by the Free File Alliance, which is a nonprofit organization helping out taxpayers file their taxes for free. So this program has had improvements over the years, but remember, if you file your taxes using Free File, that means your state taxes, you need to have a Franchise Tax Board account and an email account to be able to continue to file your state taxes for free. And you guys can check out more information down here and some of the benefits of this program. Next slide. And then finally, Direct File. So it's a free pilot program that is from the IRS that allows you to file your tax returns for 2024 until April 15 of 2025. And the states with extension, the program will remain open until October 15 of 2025. It's on phase 2. So this program began last year. This year will be phase 2. And unfortunately, it doesn't have a much optimistic outcome after this tax season. However, this year, 25 participating states are joining this program. But remember, in California, taxpayers will need to file by using, they can file their federal taxes using direct file, and then their state taxes using the Franchise Tax Board website. And then here is the updated times for the IRS customer service representatives. So they're available Monday through Friday, 4 a.m. to 7 p.m. Pacific Standard Time. So make sure that you call them and ask your questions. And, we had a chance to preview this program and know that it's very easy to use. So it's just like any other tax software that is free. And so here are some of the results from last year and this year. Another feature that it has is that more income sources could be added, such as W-2 earnings, SSI, railroad retirement, unemployment, interest income, pension and annuity income, and then also recently added were any 1099 are earnings. And the credits, you could claim much more credits, such as the EITC, CTC, the other dependent credit, the childcare credit, healthcare credit, savers credit, credit for the elderly and disabled. However, it's still for self-employed individuals, independent contractors, complicated returns, and itemized deductions. This feature is not available. So far here in California, as of February 2025, over 9,000 returns have been filed using direct file. And I can tell you that the Department of Treasury and the IRS, they're still optimistic with the program, despite the fact that, not much is known about what's going to happen. But we will keep you posted if this program continues to be used for the next filing seasons. Next slide. So now we're gonna move on to the common family tax credits. And before I move on, I wanted to quickly mention, if you guys have any questions, you can ask us here in the chat box, or also we have a Q&A feature. And feel free to throughout the presentation to ask. We'll answer as many questions as we can. We typically leave them in the end. However, if at this moment you guys want to ask a question, feel free to ask it. So let's go ahead and move on, talk about the common family tax credit. So there is the earned income tax credit, the child tax credit, the credit for other dependents, the child care and dependent care credit, the education credit, and the premium tax credit, which is of course related to healthcare. Here are the links for our previous presentations that we did in preparation about our taxes 2024 this past February. However, this presentation is the one that will have more complete information about the tax credits. So, that's the only difference, but you can still view it in case you want to review your taxes, or, you need a quick checkup, before you go with your tax preparer, feel free to look at any of these presentations. Next slide. So let's go ahead and talk about the earned income tax credit. So this is one of the biggest anti-poverty measures, refundable credit available for low-income working taxpayers and families with an adjusted gross income below a certain level. This year is the 50th anniversary year of this credit. And during 2023, 23 million eligible workers and families receive about 57 billion in EITC claims. So what are some qualifications? The taxpayer must have earned income of about from $1 all the way to 66,819. Individuals must be using a social security number or be U.S. citizens or legal residents during the tax year. Is still available for all filing status, including married filing separately. And also, if you're planning to use a dependent, you have to be older than this dependent. And in addition, it can only be used by workers who are 25 to 65 years of age. So it's not a credit that it's fully available for everyone. Sometimes, as your earnings increase, you may not qualify for the credit every year. So just make sure that you always check if you qualify for this credit, especially if you're meeting the age requirements. Next slide. So then, as I mentioned, the maximum amount for this credit for EITC has increased for $632 for a single person with no dependents, and up to $7,830 for married filing jointly with 3 dependents. And so for this year, there is no look back at the previous tax year to help you get a bigger EITC credit. In the past, I could tell you back 2020, 2021, this used to be a custom that, if you earn more in the previous year for this credit, you go, or in the AEI that you used to get this credit, you could possibly use it. But as of now and after COVID, this hasn't happened. So now let's talk quickly about the CalEITC. So this is also the 10-year anniversary of this credit. So just like the federal credit, it's a state credit, and so you must qualify for that program to qualify for the state credit. You need to have a Social Security or ID and live in California for half of the year. And it's now available for married families separately status or registered domestic partner. So you want to make sure with your tax preparer. And now the EITC actually grew to $31,950 of adjusted gross income. So you must earn about like $1 all the way to 31,950. Next slide. So now the Young Child Tax Credit and Foster Youth Tax Credit. So these are also California credits. So the Young Child Tax Credit is available for taxpayers who qualify for the CalEITC and have children under 6 years of age. So parents will receive up to $1,154 per child. The income range, AGI income is from $1 to $31,950. And so that's a $37 increase from last year's taxes. And likewise with the foster youth tax credit. So as you can see, so the taxpayers who are foster youth will receive up to $1,154 or up to $2,308 if they if they have a spouse that qualifies. And it's the same increase of taxes in comparison with last year. And so the requirements are that you need to qualify for the CalEITC. You need to be 18 all the way to 25 years old during 2024. You had to be part of the foster care system from age 13 and up and still be in that system. And then you also need to meet foster care verification requirements. So please, with your tax preparer, just make sure that you ask them about this credit if you have this if you meet this eligibility. So now let's quickly talk about with one of our foster youth workers who is currently 25 years old, has no kids. It has an AGI income of $17,500. How will his tax return be different in comparison with 2023? So we're only focusing on the EITC. We're not worrying about like the foster youth tax credit or anything, only the EITC, right? So if Zachary, last year he qualified, for this credit, for the EITC, he will have received about $600. Now for this year, with his AGI being under $18,591, and also meeting the other qualifications of earned income, residency, and work qualifications, he will receive $632 this year. Which is, $32 more than last year. However, there are still those CalEITC credits and foster youth tax credits that he could still qualify for and get a higher refund on that. Next slide. So now, as you can see here with the EITC and other credits table, so you need to make sure that you meet the income requirements. So, obviously for families with more kids, they will probably get the highest amount for the credits for the federal EITC, the CalEITC, and the joint child tax credit. So also as the parents, they earn more money and they go beyond the limit of 31,950. We can see here that the credit kind of phases out. So just, as a rule of thumb, whether you have 0 dependents, whether you have 3 dependents or more, ask your tax preparer about it and make sure that you get as much as the credits as you can at the federal and state level. Next slide. So now the child tax credit is a federal refundable and non-refundable credit available for parents with children. So now it's at $1,700. $300 is available extra from tax 2020. So since 2017, under the Trump administration, the Tax Jobs and Cuts Act passed. So, so many of the legislations, increase that pass under this TCJA, increase the child tax credit from the previous level at 2017. However, many of these laws that were passed in 2017 will expire in this year, and we will talk about it in a little bit. But I just want to throw that out there that if you hear recent legislation on this, it means that the child tax credit will probably change on how it is the following year. So it has a phase out limit of 200,000 for single filers and then 400,000 for married filing jointly parents. And so this is with the adjusted gross income. So what are the qualifications? So taxpayers must have a Social Security or ITIN before doing return. The child tax credit, it's for kids that are under 17 by the end of 2024. So the maximum amount that you can claim per child is $2,000. However, up to $1,700 could be refundable to you as an additional child tax credit. And so also the qualifying child must have a Social Security number. And you can see here on the right also the other qualifications that, your kid must have lived with you for half of 2024. You must provide financial support. And then also these could be the categories of a person the child could be for you. Next slide. Continue with our pandemic family, Jason and Marie. So they're a family of 3 kids. So they earn about $70,000 in AGI income. And so, like how much will their child tax credit be different for each of these years for 2023 and 2024? So as we can see here, so last year, Jason and Marie, they claimed their $2,000, had 3 kids, the total claim was $6,000. However, their refundable portion was $1,600. So in total, if these were the only credit that they claim and they were able to keep this as a refund, the refund will be $4,800. Now for this year, as you can see, their family grew. Their kids are older, so now because this credit is they can still claim $2,000. They could, they could still get as a refundable credit per kid $1,700. So now their refund is $5,100, and this is over $300 refund that this child tax credit could be. So it's important, like if there is a credit you could claim this year and you have a family and kids, make sure it's a child tax credit so that way you take advantage of this credit. Next slide. So now the Child Independent Care Credit, or CDCC, so it's designed to help working parents offset the cost of daycare, after school programs, and summer camps. So taxpayers must meet the qualifications for it, and this has been announced since the 1970s, and parents could claim from 20 to 35% of their childcare expenses. So the qualifications must be for parents working or looking for work. So an individual under the age of 13 or a spouse dependent who cannot take care of him or herself and lives with you for 6 months or more in tax year during 2024. So also these are the places of care that could be used. So inside or outside home with nannies, daycare centers with valid Social Security number or EIN, day camps, before and after school programs, and person that's not your relative. So typically dependents and spouses do not qualify for this. However, if a spouse is a full-time student or disabled, then as of 2024, they could potentially qualify for this credit. And so this will count as a place of care or as a person that's, that's taking care of your kid. So, the amount of the credit that is available didn't really change from last year to this year. So parents with 1 child could still claim 20 to 35% of a maximum of $3,000 in qualifying expenses for a maximum amount of $1,050. And parents with 2 or more children could claim 20 to 35% of $6,000 in qualifying expenses for a maximum amount of $2,100. And so if you need to claim this credit, you must have spent during 2024 less in childcare than your income for married filing jointly returns. So you paid less for childcare than the spouse with the lowest earnings. So special rules for a spouse who studies as a full-time basis or disabled. And as I said, it was recently updated this year. So just make sure that if you're going to be claiming this credit, let your tax preparer know so they know how to properly allocate it to your case. Next slide. So then I will pass over this presentation to Luz, and she will tell us more about the credit for other dependents.
Thank you, Wendy. Okay, so this non-refundable credit is for individuals with a dependent who meets additional conditions in addition to the credit for child and dependent care expenses. The maximum amount you can claim for the credit is $500 for each dependent who qualifies for the ODC. This is highly beneficial for families with 17, 18, and 19-year-old students who are studying on full-time basis. Next one, please. Education credits. We have the American Opportunity Tax Credit, the Lifetime Learning Credit. Use Form 1098T to add information about tuitions and fees. College and universities send this form to students yearly. Check with the tax preparer for recent federal loan forgiveness, cancellation of debt income reported on 1099-C, since the taxpayers must pay state taxes on this income. Next one, please. Premium tax credit offsets the cost of health insurance purchase through the marketplace. There are two important forms here, the Form 8962 and the Form 1095A. Next one, please. About the refunds. These are sent with direct deposits into a checking or savings account. A refund could be delivered in 7 to 10 days, but usually takes 21 days to process. This year, refunds with EITC, CTC, and YCTC are delayed, so most of them would be provided after March 3rd, 2025. You could also check the IRS refunds website to check the status of your refund. Next one, please.
I'd just like to say one quick thing. For those of you out there who are trying to find a tax preparer, and you find a tax preparer who says that your refund will be deposited into their bank account instead of yours, find a different tax preparer. We've seen a lot of scams recently where the tax preparer then takes your refund and either will only give you part of the refund, or they'll change your return after you want it filed to request a higher refund and then keep the difference. So just be on the lookout for that.
Thank you, Travis. What if you owe taxes? You must pay by regular filing deadline, April 15th, 2025. Some payment options include money orders, personal check made out to the Treasury Department. Don't forget to include your Social Security number. The payment can also be processed by direct withdrawal from bank account, credit, or debit card. Other options to pay back to the IRS include installment agreements, offer in compromise, currently not collectible, or declare bankruptcy. Next one, please. Tax fraud prevention tips. Remember that IRS and FTB will always contact you via mail first and will tell you the issue with your tax return, payment, or stimulus. Also make sure that your own bank account for direct deposit and not use your bank account for direct deposit and not the tax preparers. Tax preparers must declare a PTIN and put his or her name on the return. Become familiarized with your own tax return and always keep up with the latest news about tax law changes. Next one, please.
That will be with me, Luz. Thank you so much for telling us all of those great tax fraud tips, and also make sure that you make any payments that you have to do with the IRS. Make sure that you're ready to make them if you have to make them. And so an advantage of filing your taxes earlier is exactly precisely that you know the deadline is April 15. So if you know that you have a big expense coming up, or you expect that you're going to owe to the IRS, just file. The sooner that you file, the better, and be mindful of the deadlines from the IRS. So some of the key tax fraud statistics that I wanted to share, like the IRS, they have detected over $272.7 million claiming fraudulent returns, and 96.3% of these returns were prevented. So this is according to the last year TICTA interim report. So there are a lot of statistics here in terms of fraud prevention. So that's the good thing about filing your taxes that it does provide you this protection versus tax fraud. So you want to make sure that, file your taxes, you will be protected. And in the case you're not protected, the IRS is doing, they're investing a lot more money on their technology and also, in issuing IP pins to taxpayers. So that provides an additional layer of protection in your tax returns. Next slide. So really quickly, the sunset tax legislation. So remember, if at the or in the middle of the presentation, as I was talking about the filing your taxes and when would you will need to file with a certain income and all of that. In the case that you can't file your taxes with the IRS, you have up to 3 years to file your federal taxes and 4 years to file your state taxes. But this year is the year due for the 2021 taxes. So it's really, really important that you file your taxes because within this year, the earned income tax was expanded. There was an advanced child tax credit given to parents, so up to $3,000 and $3,600. And then also the recovery rebate credit, the third stimulus check of $1,400 per person and dependent was given. This past January, the IRS, in order to prevent many people from, claiming the recovery rebate credit, they might have sent, this third stimulus check to you within January of 2025. If you see that you received it, make sure that then you don't claim this recovery rebate credit. But if you didn't receive it, just, and you still need to do your 2021 taxes, make sure that you claim all of these credits. And so you pretty much have until April 15 of 2025 to file them. So, and so the IRS, they send about $2.4 billion in payments for 1 million people. And so please file your taxes after April 15. What the IRS will send you will be a letter telling you, thank you so much for filing your taxes for 2021. We're processing them. However, after the 3 years statute of limitations, we will not be able to give you a refund. So you want to make sure that you don't miss out on the chance of getting these 2021 tax refund if it's entitled to you because it's from the stimulus checks. So from back in the pandemic. So if you don't get them within this time, the IRS will not give it to you in the future. And in terms of compliance for us, that is something that we ask our clients to keep. It's a good thing to file your taxes no matter when. However, if you are expecting to use that refund with the, by claiming these credits, it's not going to be a good thing for you. So please get caught up filing your taxes by April 15. Next slide. So then here is some information. So please focus if you haven't received this third stimulus check, these are some of the requirements. And the taxes from 2019 and 2020 were the ones that the IRS considered before giving this stimulus check. Next slide. And then also, they had AGI limits. So if you were a single person that earned about $75,000 to $80,000, the IRS, they will give you a stimulus check for $1,400. Then if you were head of household and you earn about $112,500 up to $120,000, then they will give you that. And then if you were married filing jointly, $150,000 to $160,000 will give you a $1,400 stimulus check. And this is just more information for you. If you know for sure back in 2021 you did not receive a stimulus check for $1,400, please let your tax preparer know so that they could properly ask for it as a recovery rebate credit on your 2021 tax returns. Next slide. So now we're going to move on to a section about current news. And so, what we are trying to tell you a summary that everything that has been happening around the IRS and the Department of Treasury. This isn't the list that, or all the news. We're trying to compile them into 5 slides. So, bear that in mind. This is just a summary, but we will let you guys know the importance of this. So, one of the first big update from the IRS and the Treasury Department is that with this new administration that started just in January, There is now a new IRS commissioner who is Melanie Cross, and then also a U.S. Department of Treasury secretary, and it's just called Besson. So these both of these individuals were confirmed by the U.S. Congress. So as you know, these governmental roles make key economic and fiscal decisions that affect businesses and individuals. So it's very, very important that these individuals are qualified to take this role. And so they're always aligned with what the country's issues are in terms of fiscal and monetary policies, such as inflation, interest rate, IRS tax code changes, etc. So in the past administration where IRS Commissioner Danny Werfel, Doug O'Donnell, and also the previous Secretary of Treasury, Janet Yellen, they were very focused on doing audits for wealthy taxpayers, those who earn incomes over $400,000 to $1 million, who had not filed taxes since 2017. And so after this initiative began in September of 2024, 21,000 of these taxpayers have filed, leading up to $172 million in taxes being paid back to the IRS. So by the end of 2024, nearly of 80% of these 1,600 individuals that were audited and were wealthy taxpayers or businesses or small business owners, they made payments to the IRS, accounting to $1.1 billion being recovered to the IRS. And so $100 million of these dollars were collected additionally to this amount since July 2024. So the bottom line with this news, there is new people in the administration. It is too soon right now to know exactly if they will continue to follow this policy in auditing rich taxpayers, as the previous commissioner and Secretary of Treasury did. However, they have an audit goal, and all of this is based on the Inflation Reduction Act, where Congress allowed the IRS to have over $85 million of money to be able to enforce this. However, at this point, for Commissioner Cross and Secretary of Treasury Besson, it's too soon to understand what policies that will follow. Next slide. And so here are some results, from last year. So, as I mentioned, they concentrated on wealthy taxpayers, partnerships and corporations. The IRS, hire 1,500 senior employees. And also AI technology and other methods are being used to audit large partnerships. And also the IRS, they improve on their ability to send substitutes for returns and also in the clarity of their letters. So this is just some information that we presented last year. And of course, we will keep you posted, once we could get a handle of what this new Secretary of Treasury and IRS Commissioner will focus on. We'll definitely let you guys know about it. Next slide. That has been on the news is that, the Department of Homeland Security and also the this Department of Governmental Efficiency, DOGE, has been sending memos to IRS enforcing agencies to deter criminal activity. So recently, Secretary Noem, she reached out to Secretary Besant, Treasury Secretary Besant, in a memorandum asking to use some of these IRS CL agencies, so these agencies that are auditing the wealthy taxpayers, to assist the Department of Homeland Security in cracking down human trafficking networks and target businesses employing illegal immigrants with their financial investigative skills. So this collaboration is expected to make a new chapter in the interception between financial and immigration law enforcement. And of course, we will keep you posted on what happens, because with these memorandums, also DOGE has been sending memorandums to the IRS asking like, hey, please let me access the taxpayer information. And there has been memorandums sent. However, the important thing to remember is that in that communication, there is a sender and there is a receiver, right? So the receiver, in this case, the IRS, in this case, the Treasury Department, have to respond to these requests, right? So, So right now, we're not sure what will happen if the IRS and the Department of Treasury will respond and tell these, the Department of Homeland Security and Dodge, like, hey, yes, it's okay for you to access our data. We're not sure. There is a likely transition of resources of the audit employees who are doing these audits to wealthy taxpayers, and also I guess after the tax season is over, there is a possibility for transfer of resources or inter-agency sharing. So also this is reminiscent. So back in 2021, the IRS, they attempted to crack down on criminal activity. And so what they were expecting criminals to do is to report their illegal activities, or also if they stole property, they had to report that in the Schedule C and the stolen property. So, that brings out the bigger question of how much the IRS could be willing to cooperate with other government agencies who are trying to crack down on other illegal activities such as human trafficking and immigration. So, as you know, both the IRS and Franchise Tax Board, they can only provide, they're limited on the amount of information that they can provide with other agencies. So you can always rely that they will follow their Privacy Act. So this is under U.S. Tax Code 26, Section 6103. So the IRS, they cannot disclose personally identifiable information, PII, tax information, such as Social Security, ITIN, or other identifiable information to other agencies. So at this point, we are very, very, trying to be as confident as we can that the IRS, they will protect your information, and they will make sure that anything that is shared is mostly within the IRS, because it should be used to deal with tax processes only. But, at this point, we can't confidently tell you that this will be what will happen. And so for taxpayers who have an ITIN, and this is something that, I recently learned at an EITC Coalition ITIN meeting that we have. So for those payers that have an ITIN or may need to ask for a new or renewal ITIN, it's recommended that, you kind of become aware of your legal rights and implications in continuing to file your taxes. So if you're an ITIN holder that, has filed your taxes, the IRS is expecting you to file your taxes anyway, so it might be better for you to file your taxes. However, if you're a person that's asking for a new or renewal or ITIN, keep in mind that you can also file your taxes 3 years late. So, we're trying to be as optimistic as we can. The U.S. tax code is very, very clear in the protections that it could give you, but, we're not sure about the future of this, once the agencies start cooperating. And so also some additional criticism, the IRS is too complicated to understand. Based on the State of the Union address that President Trump just gave, it seems like, that because of the implementation of tariffs on international goods and charging foreign taxes on goods and services provided abroad, that should be helpful for a creation of an external revenue service. Also some recent agencies, there has been some recent agency firings and tax offices closing within the Dutch recommendations. So, 7,000 professional IRS workers have been fired since February. Also, 113 taxpayer advocate service will be closed by the end of tax season or allowed to continue operating until May. And then, it is expected that also with the use of layoffs, attrition, and buyout offers, like it's happened to other departments of the U.S. government, there will be $90,000 workers being cut off their workforce. And then, of course, as I mentioned, direct file, the expectation of it running is not as optimistic. So remember that the IRS, they're the agency that collects taxes. And so this is the most beneficial way for the federal, state, and local governments to collect money from taxpayers in order to finance the country's budget and projects. This includes police, fire station, schools, roads, and other other benefits for the members of society. So the bottom line that we can tell you now with this shocking news that, we keep hearing is that, if the government, ever wanted to change our Internal Revenue Code, United States Tax Code, and other government agencies, just remember that there has to be a solid alternative that will need to be implemented. So the recommendation from experts, and we will include ourselves in it, is just continue to file your taxes as usual. Let the upper government levels, make these decisions. And so what policies or tools they decide to keep or leave. There is a possible delay with tax processes, refunds, audits, identity theft cases, United States tax court processes, tax evasions and enforcement with less staff available. Use direct deposit as much as you can to receive your refund. And as we said, we will keep you posted on what happens with future tax filings. And so now with cryptocurrency, it has become one of the most financial options for people to earn income. So, but just in economic terms, this market for currency, it's considered to be volatile. So just highly volatile. So just like a coin or stock market. So it's important for investors to be aware that as they become involved in this market and are willing to have sudden gains or losses in a shorter period of time, this will be based on price susceptibility and inelastic supply curve. So this is something that I'm trying to show you here. The cryptocurrency market has grown exponentially and is currently valued at $3.22 trillion as of 2025. So we cannot advise you financially on the best options for you to follow as you acquire cryptocurrency or keep up with it. But what we can recommend you is that be aware of the risks and responsibilities that come in being involved in this financial market. So with taxes, this will require you to include additional tax form on your returns and report that you're paying the right amount of taxes on capital gains and losses per year. So in the case that the IRS questions you with this in any audit or verification, this is tough to do sometimes. So please have a good financial advisor or app that is helping you keep track of these sudden changes and information. Tax attorneys, it is difficult for them to prove sometimes the details on how these transactions happen and that you paid and reported the right tax info and also pay the right amount of taxes. So keep this in mind. So if you use this, financial option, to earn income, we will be happy for you if you earn money. However, in terms of taxes, it just becomes more complicated for you. So we will see it, if we ever have to review your tax return, we will see it and we will say, oh, okay, this is a little bit it's going to be a much more complicated audit or issue to solve with the IRS. However, just make sure that you're aware of that it comes with a little bit of more responsibility and, make sure that you're ready to deal with that as we're helping you out here on Legal Aid. Next slide. And so then finally, the Tax Jobs Cuts and Extension Act. So as I presented it on the child tax credit portion. So a lot of these laws under this bill are set to expire on December 31st of this year. But to keep most of the provisions, there will need to be a source of funding. So it is estimated that $4.5 trillion in tax cuts, or at least $1.5 trillion in spending cuts across 7 committees. So, here are more details on how, these lawmakers, particularly Republican at the House and the Senate, will try to pass this law. At the moment, the focus is passing 2 separate bills about it. And so one will be focusing on border and security. And so back in 2017, the implementation of this law had a growing effect on the standard deduction, the marginal tax rates, the child tax credit, restrictions from the victims of fraud and criminal activities, which I hope that it could really change with the retirement account, and then also cutting the corporate tax rate to 21% and cap deductions for state and local taxes. So the goal is that the goal for this legislation was that $1.5 trillion will help spur economic growth, reduce regulations, and create more business-friendly environment in the U.S. However, these tax laws are set to expire. So you guys can see here on the right. So back in 2017, for the standard deduction for a single filer, it was $6,350. This year, still covered by the TCJA, it will be $14,600. And then post this law, if nothing happens, if Congress were not to approve the extension of this, it will go back down to $8,300. So a lot of taxpayers, they will turn out owing money, more money, because the standard deduction, it's what kind of like, shields you from, or gives you a reduction of how much you owe. Also, the marginal tax rates will decrease from 39 to 37%. And the child tax credit, as I mentioned, it will revert back to 2017 levels, which was $1,000 of refundable credit. So hopefully, we'll keep you guys posted on what happens with this TCJA extension. It is likely that a lot of these laws will continue, as Congress approves them for the next budget year. But at this point, we don't know. All we know is that Congress is working on it, and they're also working to pass the budget. Next slide. So now some important contact information. So please dial 211. These are the beta sites that are, helping out filing your taxes and also with some IT processes. So please contact them. If you have any after tax issue, please call us here on Legal Data at 1-877-534-2524. There's also the information for the Taxpayer Assistance Service and the Taxpayer Advocate Service, but you might need to make an appointment with them. And then if you have, refunds, a stimulus check, if you haven't contacted the Franchise Tax Board about your Golden State stimulus or middle class tax refund, please contact them. Next slide. And so here are our services that we can provide you help with. So we cannot provide you with tax filing assistance, but, we can provide you with any help with tax issues and controversies, such as audits, not getting your refunds or getting your stimulus check, if you need to go to tax court, if you have communication issues with the IRS, or if you need help to collect a debt, like, or paying off a debt to the IRS, make sure you give us a call. Next slide. And so now, as I mentioned, please file your 2020, and here is a typo, it's supposed to be 2024 taxes to avoid paying interest and penalties. And then also get caught up filing your 2021 taxes. Make sure you use your middle class tax refund fund and ask about your golden stimulus check before April 26th of 2026. If you don't do that, the Franchise Tax Board would just say, okay, well, here, let's use it for the general fund and in other California expenditures. And so please check out our pages in the IRS, Franchise Tax Board, United Way of California, and then also our page in the San Diego Law Library to keep up with the latest info. And then our next webinars. So on Monday, April 14th, we were scheduled to have this webinar on April 14th. And this same webinar in Spanish. However, in the case it doesn't happen, please make sure that you go to the San Diego Law Library and also our page. We did a good webinar in preparation to file your taxes in Spanish. So make sure that you watch that one. And if you still have any questions about filing your taxes, this webinar will also be up soon. And yeah, with that, Travis, if you wanted to give an opinion about all the recent news from the IRS and just...
No, I think we're just going to stop there. I think there's one slide, but I think we're just going to go ahead and skip it. Did anybody have any questions? I can't see with my screen sharing. Let me stop that. Did we have any questions? Did you see, Wendy?
Let me see. No.
Okay, well, I think we're right on time. So with that, thank you everybody for attending our webinar. Again, the Law Library should be handing out surveys, so please, and we'll see you next time. Thank you very much.
Thank you. Bye.